Good afternoon and welcome to another edition of Money Matters TV. My name is Dan White. I'm the host of the show. I'm also president and CEO of Daniel White and Associates. We are a retirement planning firm headquartered in Glen Mills, Pennsylvania. We also have two satellite offices, one down in Middletown, Delaware, and one a little further south down in Lewis, Delaware. And we work primarily with people 50 and older trying to really cobble together that retirement income plan, how they're going to live after they quit the job and where they're going to get money from. And the big question we always get, especially at the beginning of the year, is, where's the market going to go? We just come off 3 great years in the stock market. We're talking like 24, 23%. Last year was up almost 16%. There was a poll went out. Wall Street analysts have always kind of run with the herd, usually tilting bullish. And in 2026, Bloomberg tracked an index of 21 strategists who maintain forecasts for the S&P 500. And this year, they are 100% bullish. All 21 think the stock market is going to be higher by the end of the year. And, Warren Buffett, I love quoting Warren Buffett. Warren Buffett says, be fearful when others are greedy and be greedy when there's blood in the streets. Well, if everybody's positive and saying that the market's going to go up, maybe you ought to run the other way. But I'm here to tell you, the 21 analysts, their gains ranged anywhere from 2% to Oppenheimer was the highest. They think it's going to go up 17% this year. And like I said, the contrarian in me says, when everybody says it's going to go up, maybe they're all wrong and it's going to go down. But I'm here to tell you a couple reasons why the stock market is very healthy as we enter 2026. The big complaint people have, it's just 7 stocks driving all the gains. And this refers to the Magnificent Seven, the 7 largest U.S. stocks, the market leaders. They get a lot of attention, and they have driven much of the artificial intelligence boom that we're seeing today. But the good news, folks are wrong about this one. We can see this by studying market breadth. This tells us a lot about whether stocks are rising or just a few of them are rising. And you look at this through the advanced decline line on the New York Stock Exchange. So to get this line, you get the number of rising stocks from the day, subtract the number of falling stocks, and then you add that number to the previous day's reading. So if only 7 stocks were driving the market, the advanced decline line would be dropping even as stocks hit new highs. But when you look at that line, that's not the case. It's going up. It's going up a lot. So that's good news. That's saying that, hey, it's not just 7 stocks. It's a pretty broad market rally. The second thing, when you look at concentration of the market, now, the pundits will say that the Magnificent Seven are overrepresentative in the market, a measure called concentration. And when market concentration has increased, that always happens in bull markets. It's a feature. It's not a bug. But we can see the same thing here. Instead, if you look at the equal weight market index, it wouldn't perform well if only 7 stocks were driving the market. But that's not what's happening today. They're hitting new highs as well. So the takeaway here is clear once again. Most stocks in the market are going up. The final chart we look at is the percentage of New York Stock Exchange listed stocks that are trading above their 200-day moving average. And that shows, again, what percentage of the market is in an uptrend. And we don't want to see the market hitting new highs while most stocks are in a downtrend. That would kind of signal a looming crash. But right now, about 60% of stocks are in an uptrend. That's a very healthy number. It's not low enough to signal a divergence, and it's not high enough to signal an overheated market. So one conclusion is clear as we head into 2026. We're starting the year with a pretty healthy stock market environment. That's not to say stocks can't fall. A lot of geopolitical concerns out there today. But right now, as we head into the new year, things look pretty good. So that's our take on the market. I'm happy to introduce on the show today, I do have a co-host, Doug Bloom, the founder of DAB Ventures. Doug, welcome to the show.
Thank you. And interesting take on the market. The press is very jittery, and so that's the one thing is if the press gets all bullish, then I think you start looking for the exit door early.
They say if it bleeds, it leads. So everybody's looking for bad news, but everything looks pretty good right now, but who knows?
Well, and the other thing that people have to keep in mind about the markets, I think just about every trading year, there's a 10% drawdown somewhere in the year. So you're going to have this jerkiness every now and then when you have upwardly trending markets and profit taking and all sorts of stuff going on. But the breadth data to me is very interesting. I hadn't been aware of that.
Yeah, I mean, you're absolutely true. I mean, even if the market, even last year, went up 16%, but you remember Liberation Day, we had a 12% drop in a week. So you do have the volatility throughout the year, but at the end of the year, if it's a positive year, then it's a good thing. So
plus we had a little burp in November, and everyone thought it was the start of doomsday again. So I think there's just too much money still on the sidelines, from what I understand. So.
There is a lot of money sitting out there. And the other thing you see at a high is you see a lot of giddiness. People are like, oh, everybody's talking about it. We're not seeing that today. People are actually a little bit scared instead of being giddy. And to me, that's signals to me that we're not near a top yet.
Yeah. So if you're the last person to enter the market, you look around because you'll be the last one out too. So that'd be fun.
It's the old musical chairs. Yeah.
Yep.
Well, let me ask you something, Doug. After working with so many leadership teams as you do, what do the ones that actually win do differently early on?
That's a great question. What I do work-wise with DB Ventures, we focus a lot on businesses, how they make decisions, especially how the senior teams make decisions. And good senior teams get very clear about what really matters most, and they align the senior team around those priorities. They move deliberately early on. That allows them to do the right things early and to not get distracted. That allows them to move faster as time moves on.
Okay. And what do you see smart, well-intentioned leaders get wrong? When they make mistakes, what do they get wrong about growth?
Well, it's really two kind of scenarios what happen when great teams start to stumble. One is what got them there is not going to get them there. So they continue to do the things that they've always done, thinking that things are going to just change back to the way they've been, and they need to innovate. And the other thing they tend to do is they end up thinking that more effort is going to compensate them for lack of clarity. So with any client I work with, the goal is to get really clear about why are we here, what do we believe, how do we want to treat people, how do we want to treat people internally and externally, and then what really matters in terms of our priorities. And then we can say, are we on priority or off priority? And if we're off priority, we need to get back on priority. If we are on company values, operating within the values, then that's great. If we're outside the values, we need to get back inside the values. So strive for clarity, strive for understanding what beliefs that clarity is based upon, and work towards those objectives.
Yeah, I think you hit the nail on the head with one comment you just made there. What got you there is not going to continue to get you where you want to be. And we say that all the time in retirement planning, the investment vehicles that you use to get to retirement, they're probably going to lean heavier toward growth and dividends and that kind of thing. Well, then when you retire, it's not really about rate of return and growth. It's more about income. So it's the same type of format that what got you to that point is probably not the same vehicle that's going to keep you growing going forward.
Yeah, to that point, I think a lot of entrepreneurs who go to exit their company, they're so used to being singularly focused on their company and doing a lot of things themselves. And in retirement and in wealth management versus wealth creation, you have to take a different tack. And you can't be doing everything and micromanaging everything. You need to be trusting advisors, spreading out risk instead of concentrating risk on things you control. And so there's a different mindset that I'm sure you work through with your clients.
Yeah, absolutely. Well, we have a question from one of our listeners. Robert Young from Philadelphia wants to know, in selling a business, what characteristics should you look for in a company that specializes in helping you to sell your business?
I think there's two parameters that I would advise you around, Robert, to take a good look at. You need to do some of your own homework, some of your own diligence. I think check references is always whether you're hiring a plumber or you're hiring an M&A transaction expert. So need to understand what their track record is, and that specifically trends down to what types of businesses have they helped run transactions for. What does a typical transaction look like from their perspective, and then what size transaction are they typically working with? What either size top line of the company that they're supporting, or size of the overall money, the value that they get help you receive in the long run. I think some of the interesting questions would be to ask them what factors in their opinion, what factors do they think influences the multiple on EBITDA that's going to be measured against their exit that they're helping you prepare for. So you need to get inside their head, understand what they're saying, check references, ask them for references, and also figure out who they work with as advisors, tax advisor, legal advisor, and figure out who they work with and talk to them as well. But it's got to be a personal fit that you feel you can trust their decision-making process, because it's all comes down to trust in terms of how smooth that transaction is going to go.
Right. Some great points. And if you've got a question for Money Matters, here's how you can send in your questions to get them answered.
You can have your questions answered on Money Matters. Please go to our website, money-matterstv.com. On our homepage, click on the banner on the right that says Send Us Your Questions. While you're on our website, you can find information about our host and guests, as well as show notes and links about this show and past shows. Money Matters is also available as a podcast on iTunes and Stitcher, so you can listen to Money Matters while you're on the go. That website address, again, is money, MONEY, -matters, MATTERS, TV.com.
All right, I'm proud to announce, too, we have a guest today. We have Michael Verrill, the founder of VPE Advisors, on the program with us today. Welcome to the show, Mike.
Hey, thanks, Dan. Appreciate you guys having me on. Great, Doug. Great to see you.
So before we get into some of the questions we want to get into, Mike, why don't you just tell us a little bit about your firm and what is it exactly that you do?
Sure. Actually, VPE is a firm I have that do some side consulting, but I just actually took a market leader role for a firm that's coming into the Philadelphia market based in Tyson's Corner. I'll be the market leader growing the Philadelphia market for services and consulting services focused on the office of the CFO. So we've got about 15 consultants, former Big Four folks in the Philly region here. And so we'll be looking to build out that team.
That's great. So can you tell us like who you're working with currently and what your role entails?
Yeah, absolutely. So our focus, as I said, is all working with CFOs and CEOs of mostly middle market companies, private companies, public companies, and private equity-backed companies. Our focus is on process, people, and technology. So from a process and people standpoint, we do focus on finance and accounting. And then from a technology standpoint, we help companies identify ERP systems that will support the office of the CFO, and also other technology that they might use to support the back office.
Okay. And Doug, I think you had a question or two as well,
Yeah.
right?
Tell us more about your background and how the experiences that prepared you for this. Sounds like a heck of a job.
Yeah. So I've been in and around professional services a better part of 30-year career. I've worked for local accounting firms, regional accounting firms, and global accounting firms. Also worked for some real estate consulting firms and in wealth management as well. And so I have a real sense of what business owners and CFOs need to pull teams together to execute on company vision. And my expertise typically is building, you guys mentioned before, I think, Doug, when you answered the question from the viewer, it all comes down to trust. And so I'm a trusted entity in the Philadelphia market, and I can help CFOs and CEOs connect with the resources they need to execute on the plan, whether it's a public company IPO or a fundraising opportunity or a M&A transaction for an exit, we can make sure that they have the right support and guidance to make sure that those transactions are successful.
That's awesome.
Mike, you think that companies of the size that you're working with, they would have people in-house to do these types of things, by themselves. So why is what you are doing important, and how does it fill a need in the marketplace today?
Yeah, so I think, obviously we've seen what's happened in the capital, or not capital, but human resources or human capital market over the last several years, Dan, right? There's a lack of qualified talent. Talent is hard to come by, especially in some of the senior levels in firms. And so we have a good stable of folks that have that high level of expertise. I would say multi-billion-dollar companies probably take the time and dollars and resources to build out those teams. But, if you're a middle market company and you do one or two M&A transactions a year, or you're getting ready to go through an IPO, you won't necessarily have all the necessary talent on staff, nor would it make sense for you to build out those resources. So a lot of the work we do is project-based. Our experts will come in for the period of time that they're needed, and then they'll go away once the company doesn't need those resources anymore. So it's an opportunity for the company to get the high-level expertise they need, but also be sensible in how they pay for and execute on those resources.
So you're working with some pretty heavy companies, Mike. When you just mentioned some of what you're looking for in teammates or team members, could you elaborate a little bit more about the types of experiences they have? If they've been CFOs, if they've been controllers, if they've been something hybrid finance, maybe?
Most of our, probably 95% of our talent has been former Big Four folks. So most have CPAs. They have large company experience. Maybe they worked on large audit teams or business technology transformation teams at the Big Four accounting firms. And so they join us because they, want a different scenario than the typical partner track that a Big Four firm might offer. And they want variety in the type of clients they work with. So we're able to attract some of that very high level talent and deliver it, like I said, in that project-based environment.
That's amazing in this current climate with accounting professionals, because there's fewer and fewer accounting graduates from college, and there's an aging out of existing accountants. So you guys are the market need.
I follow that very closely because I have a son that graduated from Drexel 2 years ago with an accounting degree, and I have a daughter who's a junior at Catholic University getting her accounting degree. So I'm very aware of those statistics, and it's part of the reason why I encourage them to look at that. The numbers actually of graduates and applications for accounting just creeped up recently in the last kind of turn, but you're right. There is a lack of folks going to college for accounting degrees and graduating. So finding top level talent is a challenge, and that's the basis for our firm. Kind of where we started was executive recruiting and placing interim people, and so there's a high level of expertise in kind of identifying the best talent and making sure that the right resources and people are on the right projects.
Well, how do you lead? I'm sorry. Go ahead, Dan.
I was going to say, Mike, you talk about this lack of talent. I remember when I was in college, they called it the Big Eight, and now it's down to the Big Four. So I guess there is a lack of talent. But what is there any industries or companies that you tend to gravitate to? Do you gravitate to certain industries or companies, or is it just kind of widespread?
So I would say as a firm, we're industry agnostic. The firm, like I said, is headquartered and based in Tysons Corner, Virginia. So as you can imagine, they do a large amount of government contract work, and particularly aerospace and defense. So we've gotten a really nice coverage in those types of companies, both public and private equity backed. We do life sciences work, and that's one of the areas we'll all be building out in the Philadelphia market. We really want to increase the number of, I'll call them commercial companies that we work with. So industries like life sciences, technology, real estate, supporting a lot of manufacturing, which is still something that private equity buyers focus on. We've done some work in CPG, consumer packaged goods companies. So generally agnostic, but definitely have some areas of concentration and quite frankly, looking to grow out some of those industries.
So how do you lead these people? I mean, what special approach do you take to leading these highly successful senior level accounting professionals?
Yeah, so I think the first thing really is to build a team culture, right? Like, unless everybody feels like we're all in this together, working hard to bolster the offerings that Alliance Group has and really doing good by our clients and doing good by the company, then you're going to struggle to be successful. The second thing is a high level of communication. We have, daily check-ins with the resources that are out in the field. They have open lines of communication to the folks that lead those groups. And so making sure that, we know exactly what's going on with the clients that they're working with, if there's challenges, opportunities that come up, right? Some of the things that we're working on with one client might translate for projects that we're working on for another client. So I would say teamwork and communication are two of the paramount pillars to be successful when you're delivering these types of services to companies like this.
So, Mike, you mentioned you work with companies that sometimes go through mergers and acquisitions transactions or accessing public markets. With President Trump, I think there has been an increase in M&A. So what do you see from an activity standpoint in these two areas moving forward in 2026?
So I would say coming into 25, everybody really thought that was going to be the first year of a new banner year for M&A and IPO activity. It's stalled somewhat. Obviously, there were some headwinds with DOGE and the tariffs and things like that. But everybody I talked to and some of the early activity we've seen for 26 is pointing to both a lot of M&A activity and also companies looking to access the public markets. I think maybe strategics will be a bit down when it comes to M&A, but certainly you mentioned it before in the earlier conversation with regards to the capital markets. There's a ton of money on the sidelines, and that's just as true in private equity as it is in the capital markets. And so we're already seeing a ton of interest in companies that we work with looking to buy companies as a strategy for growth, and also companies that we work with that are getting ready to be bought. So I would say that 26 is looking in January, obviously not a lot of runway in front of us, but initially what we're seeing and hearing and what we're getting feedback from clients is that there's going to be a lot more activity in both the public markets and M&A. We're starting to see some returns too of like SPAC opportunities. SPACs were big and kind of took a little bit of a lull, but we're having conversations with several clients now that are either contemplating starting a SPAC or SPACs looking at potential targets.
That's amazing that you're bullish on M&A this year. Your clients are both, from what I understand, both mid-market and larger organizations doing transactions, and also PE firms. How much do you work with a company just for the project basis, and how often do you work with companies on an ongoing basis to provide accounting oversight?
So the nice thing about this, and one of the things I really like about the Alliance Group opportunity, as I mentioned, I have some experience with other accounting firms over the years. And, a lot of the work, if you sell an audit, you do the audit and you got the auditors out there once a year or tax work or whatever. But because we touch so many different areas for our clients, and the office of the CFO is been so elevated in such a strategic position in the growth and focus of the company, that we're working on projects all the time. We're adding an AI and data analytics expert. We've got projects going on right now with clients analyzing what the impact of AI is to their back office functions, board members are saying to the CEO, how are we executing on AI? How are we integrating that? How are we using that to increase our profitability and improve our processes? So there's a lot of investigation, I would say, and questioning around how companies are going to use technology to better themselves. Finance and accounting is always forefront, right? Like I always tell companies when I'm working with them, like, if your growth story and your financial story don't match, it's going to be very difficult to convince the investors in the marketplace that you're a good, safe bet.
Well, Mike, it seems like you and your firm, you've been doing this for quite a while, and you've been very successful at it. What do you think has been your key drivers for success in this field?
I would say for me personally, the biggest driver has always been being consultative, right? What I always say, the intersection of a company's need and what my company provides, it's very rare that they hit at the same exact moment. And so just being a valuable resource for clients, providing market information, introducing them to other people that could maybe help them with their business, even if it's not something we exactly do. So I think trying to just be a helpful resource to companies has been a big part of my success. And then just being persistent, right? People aren't always ready to execute on whatever it is, services you're offering, but persistence is key. I would say polite persistence, right? That's always, you don't want to be a nudge or nag and bother people, but polite persistence has been I think a very successful characteristic that I've tried to employ over the years to, connect the right resources with the right companies at the right time.
We're kind of getting towards the end of our interview, and I'd like to ask you something more personal. What books are you reading currently, and do you have something you would recommend?
Yeah, absolutely. So obviously, you guys talked about it earlier. We're in the age of AI, right? Everybody's nervous. I just was on a webinar earlier today with trying to help people figure out how to integrate that into their daily lives and also what the impact is to you personally. So I recently came across a book called Primal Intelligence by Angus Fletcher. Extremely interesting. It was based on research that was originally done at the Ohio State University. U.S. Army Special Ops took it over and further tested it with some of their folks internally, and then actually took it out into the professional realm. But it really focuses on helping individuals tap into their intuition, their imagination, their emotion, their common sense to think more clearly and make better decisions. They've actually proven that there's certain techniques that you can use to do that. And if you think about the age of AI and avoiding, robots taking over our jobs and everything else, those are the characteristics that AI cannot recreate. And so if you can leverage those humanistic characteristics, then I think you can create a successful environment where you're always staying one step ahead of technology.
Well, that's great information today, Mike, and we really appreciate you being on the show. Doug, thanks for being on the show as well. And next month, we are going to have Dr. Issam Hamza, MD, from Rocket Doctor AI, Inc. So I'm sure he's going to provide us with a lot in the AI space. So until next month, we want to thank everybody for listening. Have a great week, and thank you for watching another edition of Money Matters TV.